So today we are going to be backtesting on gold, and this is the strategy. For those of you that don't know the strategy, we first of all look for market structure, boom, and we got this. So this is the trade. First of all, mark break of we look for liquidity sweep first. Then after looking for liquidity sweep, then we look for a break of structure. Then we look for our structural liquidity. Then our point of interest. Our point of interest is other block below the structural liquidity, or fade other block. Then we now have this. Then protected low will be this. This will be our protected low. Then we now have this. So we are going to be targeting 3.45 ratio. That is what I normally use. So that is it. So that is the strategy we are going to be testing. So let's just get into the charts now. So first of all, what we do is check our 4 hours time frame for the overall bias. That is what is going on in the market. Then this is my we have this. So basically we are on uptrend, so we'll be looking for buy. Downtrend, so we'll be looking for buy. Then let's check what is going on in 1 hour time frame. Seems like a party just started. Okay. So seems like that's 1 hour time frame. So let's take a look at this 1 hour time frame very well. Whether we receive structural liquidity. Is this a liquidity sweep? No. I don't see that. But here is break of structure. Okay, let's assume here is our liquidity sweep. Let's see. Let us observe if let's assume here is our sweep. Then let's assume here is our protected low. Let us check if the setup. The normal liquidity sweep need to be obvious, but this one is not obvious. So we are just kind of testing out to know if this setup will actually hold. So our structural liquidity is normally A, so it's A. Look at it. So yeah, this structural liquidity is valid, but what I don't trust is our fade order block. That's what I don't trust our liquidity sweep. But if you see tap out, a tapping. So let's see what happens if this gonna go our favor. I'll just do a sheet. That way we'll find out. Okay, I normally 3 points. Let's go. Okay, seems like it took us out. You see, that means this kind of liquidity sweep, I don't think it will work. So this kind of liquidity sweep doesn't work, but we'll still count this one as one of the 10 trades we'll be taking, because we'll be taking 10 trades to know. So let's go to 15 minutes time frame to see what is going on in 15 minutes time frame. Was there a sweep? No, I don't think. If I should take it as my sweep, then here's my other block. As my fade other block, then that means let's make let's see the setup if the setup will actually work. Let's I hope we are not chasing the market, because that is the most crazy thing to do, to chase the market. If you chase the market will chase you out. So let's just see if this can work. Here's our break of structure. Here's our break of structure. Our break of structure. Then let's use our Fibonacci tools to know if it is on if the structural liquidity is on our 50%, because we normally use Fibonacci tools to check if the structural liquidity is in 50%. If it's not in 50%, that means it doesn't work, it's not working. That means this setup is not basically working, because if I'm to use structural liquidity, I'll be using this as a structural liquidity, and it's not even close to this 50%. So I don't see the need of going into this trade. So no need of going into this trade. I just watch how it unfolds. Pam, we would have been stopped out. You see, every disappointment is a blessing. So we would have been stopped out. Let's just observe how the market will go for a certain time. Okay, let's have it. So okay, I feel we have our setup. I think we have our setup. This should be our liquidity sweep. This should be our liquidity sweep. This should be our liquidity sweep. This is our other block. Let's have it. Let's see. So here is our breakout. Here will be our breakout structure. Here will be our breakout structure. Our first breakout structure. Then our second breakout structure. Then let's see if the structural liquidity is on our 50%. So here will be our protected low. So let's use our protected low to check it. Pam, you see, it's very close to our structural liquidity. And if you see this thing have automatically become inducement, because if you look, there is two equal low. So that's our structural inducement. I don't know why this thing don't want to go out. So let's take here as our structural liquidity. Pam. Yeah, and here's our structural liquidity. See? So let's basically see what we can do. Let's see what we can do. Structural liquidity. Then let's see. Yeah, if here will be our 50, our protected low. So let's have here. Let's have it. Let's see here. That's what will happen. So I'm not like, I don't use 4 point something. Once I see that is above here, I just target 3 ratio. The minimum I target is 3 ratio, so I'll just target here. So why I target here is because anytime I didn't see another high, I don't normally like taking. So listen, so this is even a perfect structural liquidity we have here, because why I say it's a perfect structural liquidity, I have to explain to you, because normally structural liquidity have to at least, after break of structure, at least come Once it come, then it has at least go up 50%, and this up went above more than 50%. If it went more than above half of this, assuming it's a year and started coming back, we would not. But it's years through. Let's say this our structural liquid. So damn it, why did I remove this? So let's see this our structural liquidity has been violated, and let's say this is our new structural liquidity. And if we take this as our new natural liquidity, it actually do make sense to me. And if you ask me why, this is just it's tapping. So let's just see what happens. What happens? You see, it's tapping, and it is very, this one is not in our, but it's close. That is why I pick it. But normally it's supposed to be in that 50% Fibonacci. So if you look this Fibonacci now, you basically see the 50% just sitting at the 50%, like no mistake, just bam, you just tap the 50%. So let's see how it goes. And if you notice, it taps and immediately it tapped the trade, tap our trade. So let's see if we actually, you see, it's perfectly tapped. It's tapped in perfectly, like when I say perfectly, see that's what I'm saying. That's what I'm saying, that I don't put above anything if above the next low, because because normally I know that this can likely be a liquidity sweep. So imagine putting more than above here, even though you have the bias that this market is going to keep set. And this is another strategy, third trend. If you know Kojo, this is Kojo strategy. Third line touch, first touch, second touch, then this third touch. You take a trade in this third touch. That is trend line strategy. But I don't trade that anymore. I just focus on this. This is the one that works for me. So that is just, so let's see if this third line, if this trend line actually do work. You see, it actually did work. It just tapped in, pa. It's tapped in, pa. Look at it, tapped in. Let's see how many risk reward. It's tapped in, and it's giving us crazy risk reward. 8 points. Crazy. That is crazy, man. So let's just see what here. Okay, yeah. If here is our new sweep, which I don't probably think so, but let's assume here is our new sweep and see what the market. But I believe that, but we haven't had our breakout structure, so it's like our breakout structure happened here. So let's just see where this market goes. If it will give us any kind of, okay, it didn't give us any kind of, so let's see what this market have for. You see, this is very, very crazy. You see this trend line is very, very crazy. It gives us more than, if I check this risk reward now, let's see. Let me check this risk reward. Let's see how many risk reward. Let's just see the total of this risk reward. You see, it's more than like 9. It's actually crazy. That means if you are using $100 to take this trade, you'll probably be making $900. So it's like there is a setup, and I didn't actually watch out here. If you notice, this is kind of because our liquidity is normally, our structural liquidity is normally this is kind of, if you notice, kind of a shape. Then it comes here, and boom, it's poof out. So, but one thing I can't tell whether this is structural liquidity or, because I haven't clearly see my breakout structure. If I'm to assume, I'm assuming yes, my breakout structure. So to be at the safer side, let us watch if, okay, you see, to be at the safer side, I said it, to be at the safer side, this is exactly what I was saying. So let's go, and don't be surprised if here automatically become our liquidity sweep. It doesn't. That means where is this market going? Is it going to break this trend line? It touched the trend line again. I know it's going to break it. So let's, as I bring this trend line, let's start looking for sell, because obviously there is a shift market structure shift. There has been a market structure shift, or let's say, let me have here, yeah, let me have here. Then here is not capable of being my. Let's just see what actually happened in the 15 minutes time frame though. But anything that makes this to get here and start rotating, or let me just let me just do something. This is what I want to do. You see, yeah, since I can't be sure of my listing, but let me assume here, like here now is total break of structure. Here is a break of structure for this 4 hours time frame. So let's know when it's tapped into our structural liquidity. To be able to know, that's why I want to put this in Fibonacci. So whenever I tap into our structural liquidity, we know. We don't have to guesswork. And if you see, it's currently in our 50%. It's currently in our 50%. That means if it's in our 50%, that means yeah, it's likely. So yeah, it's likely to be our liquidity sweep and all of that. All of that. Let's just, okay. Let me assume yeah as our liquidity sweep. Then assume here as our, you know. But anything that make you break here, we'll just be looking for say yes our this thing, and let's see how it goes. Let's know if this thing will go up a bit to give us, if it gets here, that means it's a valid structural liquidity. It's a valid structural liquidity. Okay. It has become a valid structural liquidity to me. So let me check this structural liquidity map out on the 4 hours if it's very clear on the 15 minutes. You know, normally these time frames normally, so let me see. Sorry guys. Okay, this is a very clear liquidity structural liquidity sweep, if you can see. So this has become a clear liquidity structural liquidity for me. So anything that is going on, I'm expected to see it touch here before I take my trade. So let's watch what happens. Let's watch what happens. Let's just watch. More than really 10 hours. It seems like okay. Like there is market. Let's see maybe that we just missed the market. Okay, let's see. This is a nice breakout Charlie between, then what will all this place be? You see this, see what, if you notice from 21 to 25 we haven't seen any setup. We haven't seen any setup since about 17. So trading is all about patience. You just have to be patient and always wait for your setup. You don't have to necessarily take everything we see on the chart. Assuming I was there, this could be no, this is not let's not just try to assume what is not there. So we are hoping for this 4 hours. We are hoping for these 4 hours to kind of come in place. Okay. Okay, let's assume this market is gonna keep going high. So if this market is gonna keep going high, let's know if we will see any setup from here. If we call this our structural liquidity, our liquidity sweep, then we call this our our liquidity. Okay, let's just mark. Let's see. Call this our structural liquidity, but we will not take trade until we see is close to is in our touch, because this is structural liquidity. Then let's see if this will actually work. Then this is kind of our full complete setup. If you notice, it's kind of our full complete, and I don't even need to use my Fibonacci choose to check if this is on 50%, because probably it's on 50%. Can see it's even below 50. It entered 50% very well. So let's hope for the best in this trade. Okay, we'll see what else. Okay, there is our sweep. Our sweep. Our break of structure. Then let's see if we have our 50%. Okay, we have our 50%. We have our 50% under here. So let's assume all these our structural liquidity. It's kind of A shape. So it's kind of A shape. So that's what I'm saying. Let's assume, because it's not that obvious A shape. So you can't tell, but just assume. Sometimes let's see, why we are backtesting is to be able to know what works and what didn't work. So at least we can be able to know, okay, if this kind of structural liquidity works or not. I hope you guys are just getting it. So that is the reason why I'm just saying let's assume, because we don't actually fully know what works in the market if we didn't experiment it. So there comes the experiment. Yes, something terrible happened to our experiment. Just stopped at. So you see, it seems like God is at our side. It seems like so if why this market just be bangala 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 bangala. So yeah. My confirmed setup. That is whoa. Damn it. That is 30 trade now we have taken. We probably have lost 2 and 1. So let's continue. So if here should be our sweep, then here should be our other block. Then here will be our liquidity. What's our liquidity? Because I don't know why this market is now moving. It's now moving much. Our advice is this is a break. And it doesn't even feel like market is going uptrend or going good. Let me draw another trend line to know the bias of this market. You see, we are still dealing with, you see that assuming I draw this other line before, you see this third touch, this third touch, 1 touch, 2 touch, and third touch. This third touch also worked. You see, it's worked twice now, and here now again you can see it keeps kind of something that is repeating itself. But let me just finally look for buy, because I think there's possibility of buy, and there's possibility of buy, and as long as it's not in this upper trend line, I feel like it has possibility of holding. Only when it's on trend line, that is when I don't just need to have, you see, it's not kind of above the trend line. This is our break of structure. Then structural liquidity. I don't even, but we have to, let's check, because let's not be like we are working on guesswork. Yeah, this is our sweep. Let's call this our sweep. This is our sweep. Okay. So let's our protected loan. This seems like a big stop loss to me, though very big stop loss. But let's see if the strategy will work on this. I don't even necessarily have to kind of, so let's just hope for the best. Let's hope it's coming. It will get here. Let's hope it will get here when it finally happens. Seems like we have entered this trade. Correct. I'm correct, we have entered. But there a possibility of leaving this trade with us stop loss is what I can guarantee you guys. See the stupid thing? The stupid thing with the wine us. So at the end of the day, let's see where we get. This is the final stop, and let me see how many risk reward is that. You see, if it's just 3 at a dot, we would have gotten TP, but because it's 3.5, we had stop loss. So I'm not going to count you among the winning trade, but also lost trade. I'm sorry. But my problem is, how come Have I or am I the one not looking out properly? Or have you entered sell? How is that even possible? For and we are on February and we only then this is not giving what I expected. Wait, are you guys seeing what I'm saying? Seems like this setup is still valid though. Seems like this setup is still valid. Bam! You see? 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 I said it! I said it! Oh! I said it! I said it! I said it! I said it. Okay. Seems like this setup is still, I said it that I know that something big, something huge will happen. I just know. Is this but let it not be that. Uh-huh. Come on, chop. Uh-huh. I know. I know. I know. Hey, this is crazy, man. This is actually crazy and fun at the same time. Just yeah, so you see, that is most times you just have to look look at your strategy from all time frame because there is always a possibility. So let's go to let's even stay at 1 hour time frame. From this, the market get a bit clearer, so we know what we are doing. Based on 1 hour time frame to see what's going on first. This is this market is unbelievable. Ah. So um we are going to we are in February. We are in February 24th. So that means basically we are in February 19. That means basically we'll get into what are they calling it? We'll get into um March anytime soon. So I don't just want it to expand more than January to February. So we'll just calculate the how many the win rate of this. So basically it's normally 10 trades, but I don't think 10 trade will be possible from the look of things now. So this is one feed, two fade, three fade. So three fade, we have we have three fail, three fail, two possible. We have three loss, then two win. So basically, if these three loss we are with this our risk reward, that means we are still winning. We are still profitable because only two loss. Let's say in three loss you lost like $50 earning for 153 times. That means you lost $150. That means you lost $150, 150 $150 in the three trade. Then you earn $150 in the that means you lost $150 and gain $300 in the other two trade because the other two trade if you do one to get 150 to get 150 that means and two gave you 300 then 50 you lost in the other three is 150. So basically if you look at it you just see that let me write it so guys most of you that means there no need. So basically, if you can hear my voice, that means if you risked $50 on each trade, that means in this three trade you take, you lost 150, and in these two trade you won, you actually gained $300. So let's say you are profitable. So in the evening we'll come again and continue. Just just come back and check. We'll complete the other five to see the win rate of 100%. So let's go.